Wall Street, the OG finance film. Released in 1987, the hair, clothes, and phones are all dated, but the action could be happening today.
Lou, I got a sure thing. Anacon's deal.
No such thing, except death and taxes.
I worked on Wall Street, and this movie gets almost everything right about finance and our economy. It's full of lessons about investing and risk that remain relevant today. Let's dive right in. Charlie Sheen plays Bud Fox, a young salesman or broker. A broker is someone who calls people up and pitches stock ideas for them to buy or sell. They make money when their clients trade with them. Michael Douglas famously plays Gordon Gekko, loosely modeled on Carl Icahn. He's a corporate raider and investor.
Look sharp today, boys, especially you rookies. The Nikkei index closed up 90 points last night. We expect heavy Japanese buying on the opening.
That was the morning call. People listening to the Squawk Box. All the brokers were sitting around taking notes, listening to a voice in the background, pitching various ideas. And then the camera pans to 9:29:59, the second before the opening bell at 9:30. In reality, the morning call often takes place actually at around 7:30 in the morning. And then from 8 to 9:30, an hour and a half before the opening call, institutional salespeople call their clients and discuss the ideas of the morning call. This is why there's such high turnover in shares among professional investors. Professionals are constantly being pitched new ideas, compelling ideas.
You borrow money to go to NYU. The first year out, you make 35 grand. You made 50 grand last year, and you still can't pay off your loans. Where the hell does it all go?
Can you spare 300?
Although Bud's wages have increased over 50% in a single year, he can't make ends meet because his spending is out of control. And not only that, even though he's increased his expenses a lot, he still thinks he doesn't have enough money. And he'll never have enough money if he keeps comparing himself to people with much, much more. You know, there's a very old saying, which is happiness is making $100 a week and spending 98, leaving a surplus. And sadness or misery is making that same $100 a week but spending 102.
You remember the accident last year and the investigation that followed?
Yeah, sure.
The FAA is going to rule it was a manufacturing error in the door latch mechanism. I knew it all the time.
Well, to Blue Star, as your broker, all I can advise is you hold on to that stock.
What stock? You kidding?
You sure about this thing?
It's very clear that Bud understands that the stock is going to go up, that this is market-moving, material, non-public information. Material, meaning it changes the investment case for the stock. Non-public, meaning not everybody knows it, and obviously information speaks for itself. This is the kind of information that is extremely valuable and that in our stock market, you cannot trade on it.
Chart breakout on this one here. Whitewood Young Industries. Explosive earnings, a 30% discount from book, great cash flow, a couple of 5% holders.
It's a dog.
Very strong management.
It's a dog, pal.
Bud Fox has finally gotten in front of Gordon Gekko, a huge investor. Bud's been dialing and calling up retail investors, literally moms and pops, begging them to trade stocks with him.
Terrafly. Analysts don't like it. I do.
That's a dog with different fleas. Come on, pal. Tell me something I don't know. It's my birthday.
Blue Star.
What?
Blue Star Airlines.
Rings a bell somewhere, so what?
Bud can't resist sharing the knowledge that his father gave him just the night before, which is that Blue Star is about to be exonerated in the crash that took place about a year ago. And the discount on the stock, the overhang on the stock is going to be removed and the stock should pop a few points. That's a classic catalyst. That's quick, easy money. A catalyst for a stock could be an announcement, could be a merger, a sale, a quarterly earnings release that shows great results. These are all catalysts that short-term focused investors want to position their trades around. Generally speaking, you want to buy before a good catalyst and sell before a negative catalyst. It's all about catalysts, which is really why there's so much volume of trading and why returns are actually very low. Because once you buy and sell, you incur taxes, you incur fees, you make mistakes, but that's the way Wall Street works. That's the kind of deal Gordon Gekko likes, and when Bud mentions it, he pays attention. That's when the material non-public information that Bud gave Gordon Gekko is now public information. When the public sees this, the price adjusts. Because Gordon Gekko got non-public information before this news hit the wire, he was able to buy the stock at the lower price. Then the news hit, the stock pops, and it's champagne corks. Bud and Gordon are now celebrating with a lunch at the 21 Club.
Hiya, sport.
Nice to see you again, Mr. Gekko.
Hey, try the steak tartare. It's off the menu. Louis will make it for you.
Of course, sir.
By ordering off the menu, it's even more special. And that's the whole point. Bud is being admitted into a world that he had no access to before. 21, as it's called, was one of the most expensive restaurants in New York City. It was a favorite among investors because it was right in Midtown. 21 West 52nd Street is right next to Fifth Avenue in the financial district, the Midtown Financial District. A lot of Wall Street firms operate out of that area. It's a great moment for Bud, but obviously it's the beginning of the end. It's called steak tartare because when the Mongols, the Tatars, invaded Europe, they traveled on these tiny little horses, and they were a very efficient army. And whenever one of these horses died, these tough, stringy horses died, they chop the meat up and stick it under their saddles and ride around on it, and that would tenderize the meat, and then they would eat it. Bud and Gordon are hanging out a little bit more. I think they're actually at the New York Athletic Club, which is another one of those places where people involved in the financial industry hang out. The New York Athletic Club is on 59th Street and 7th Avenue. The steam room there, which I've been to, has like a huge fire hose which you can stand in front of if you're into that and be just completely blasted with cold water, and then you go into the steam room. Bud tells Gordon that he's lost him some money, about $100,000. And then Gordon says, "Your father's not a union representative at that company." "Oh, how do you know?" says Bud. And then obviously, Gordon explains as if Bud didn't know it for himself, but it's really explained to us, the viewer.
The most valuable commodity I know of is information. Wouldn't you agree?
It's very hard to actually make significant money in the stock market without some informational advantage. Trading stocks is a zero-sum game. If one person is lucky and makes a profit trading in the short term, someone else lost. Nothing else happened. It was just transferring money from one person to another. It takes time, more than 5 years probably, for investment to actually occur, for a business to grow materially, to have enough of its financial reports reported publicly for people to say, oh, this company is materially different than it was in the past. And then the price adjusts based on actual business performance. Many years, really. But in the very short run, prices change all the time. And they change all the time because opinions change. And you can't really predict when opinions are going to change in the short run unless you have superior information.
Jesus Christ. He's buying Anaconda steel.
Okay.
They believe Mr. Wildman is buying Anaconda steel, which means he's going to buy all of it at some point. So they want to get their positions in before the buyout price. The next thing is a strategy called front running.
When the market opens tomorrow, I want you to buy 1,500 July 50 calls. You hear me?
1,500, yes, sir.
And start buying 1,000 share blocks and take it up to $50. When it reaches 50, give out a little taste to your friends.
He's going to have to pay a premium to buy the company. And so everyone who's owning the stock before the acquisition is announced is going to get a buyout premium. This is called arbitrage. When you know for certain that something is going to happen, taking advantage of the difference in prices is called arbitrage. It's simply mediating the difference between the two prices. Gordon Gekko told Bud to buy it in the market right at the start, to buy call options, which is a way to get the most return for the money. When you buy a call option, you don't actually have to buy the entirety of the stock. You just buy the right to buy the stock at a given price. So you can get a much bigger return on your investment in a short period of time if you're certain it's going to happen. Because of their confidence in Mr. Wildman's plans, because he's gone to Morgan Stanley, he thinks he's got financing together, now he's going to Erie, Pennsylvania to talk to the management team. It sure looks like he's going to buy this company. They can all pile into the stock before the acquisition is announced. Now, unfortunately for Mr. Wildman, this drives up the price of the stock, and therefore it also drives up the price he's going to have to pay for the company if he wants to buy it. Nothing illegal here that I could see. Although, leaking the information to the Wall Street Journal, in this case called the Wall Street Chronicle.
Then I want you to call the Wall Street Chronicle. You tell the man Blue Horseshoe loves Anaconda steel.
And using code names sure does look fishy.
The point is, ladies and gentlemen, that greed, for lack of a better word, is good. And greed, you mark my words, will not only save Teldar Paper, but that other malfunctioning corporation called the USA.
This is the speech where Gordon Gekko says greed is good and talks about ownership of the company and why management teams should be owners of the company, really. And the funny thing is, everything Gordon Gekko said here in the mid-'80s became the gospel for the next 40 years on Wall Street. Management team said, you know what? You're right. We should own a lot of stock. So we've seen executive compensation skyrocket since then because companies have awarded huge chunks of stock to their senior management teams. And when you give the senior management team a lot of stock, that creates incentives for the management team to manage the company to maximize earnings per share, which in turn has led to, I think a very good performance for the US stock market in the time since then.
You're under arrest, Mr. Fox, for conspiracy to commit securities fraud and for violating the Insider Traders Sanction Act.
So that's the end of the movie. Bud is first perp walked. That's what they call it when the perpetrator is walked out in handcuffs from their office in front of the media. It's a sign that the SEC is trying to make an example of the person who's done insider trading, to very publicly punish them. So the very next day, I suppose maybe it was a couple days, I don't know, Bud meets with Gordon Gekko on the Sheep's Meadow in Central Park while wearing a wire. Somehow, Gordon Gekko very naively incriminates himself in a number of transactions.
I opened the doors for you. I showed you how the system works, the value of information, how to get it.
It sure looks like Gekko has incriminated himself, and it kind of wraps the whole thing up very neatly in a bow, really, which is, I think, one of the very few criticisms of the movie. It's very hard to prosecute these cases. Oftentimes, a fine in lieu of admitting guilt is the outcome. Mike Milken did go to prison. Ivan Boesky did go to prison. There were significant convictions in the 1980s for financial wrongdoing, so that is accurate. But since then, there really haven't been many. Thanks for watching Wall Street with me. If you enjoyed this, I think you might enjoy Billions as well. I break down the pilot in this video. Leave an emoji if you watch the entire video. Bye-bye!